This podcast is about gold and investments. I hope you enjoy this podcast, which aims to do three things. 1. I am a private investor, and by preparing this podcast, I am also organizing my thoughts. 2. Cover tidbits of news that aren't necessarily highlighted by the bigger news channels. 3. Maintain neutrality and provide hopefully refreshing analysis and insights that aren't necessarily seen elsewhere. In other words, the intention of this podcast is not to advocate for or debate about any certain individual or country. The focus is on how the price of gold and other investments are impacted. Without further delay, let's dive right in. This is the first week of April, and gold prices have been going absolutely crazy, surging to one record high after another. As of today, April 4th, 2024, gold prices are still over $2,300 per ounce. On the political front, global tensions are not showing any sign of easing. In Europe, the war in Ukraine shows signs of further escalation. Patrushev, head of Russia's security services, has repeatedly linked the terror attacks in Moscow's suburbs to Ukraine. Listeners should be reminded that the Wall Street Journal did a piece a few months ago on Patrushev, claiming that he was behind Wagner's Prigozhin's demise, so his attitude is worth paying attention to. We're not going to dive into who's responsible, but suffice it to say, it looks like Russia may be looking to escalate the conflict in Ukraine. In the meantime, Ukraine is striking at targets 1,000 miles into Russia's borders, so whichever way you look at it, the war is becoming broader in scope. The plot thickens over whether France will intervene militarily in Ukraine. Russia has claimed that France plans to send the French Foreign Legion into Ukraine by this month, while France denies it. France has been quite vocal about potentially getting involved in Ukraine. At any rate, this raises the possibility of a broader war in Europe. In the Middle East, Israel's bombing run in Syria has reportedly caused some high-level Iranian casualties. This creates uncertainties over whether and how Iran will retaliate, and if this will create further instability in the Middle East. In Asia, United States Treasury Secretary Janet Yellen has landed in China today. At least on paper, the U.S. and China are still talking. Discussion topics are reportedly going to revolve around economic issues such as China's flooding the green energy market with low prices, namely in solar panels, electric vehicles, and lithium-ion batteries. On the economic front, Federal Reserve Chairman Powell was ambiguous about further rate cuts. While he did say that he expects inflation to moderate and rate cuts to follow, he also said it would be data-dependent. So basically, he's giving himself wiggle room either way, holding his cards very close his chest and essentially a wait-and-see attitude. Economic data is mixed as usual, with some data showing signs that would support the Fed easing rates, while other data shows signs that would support the Fed maintaining current rates. On the financial front, even big-time hedge fund managers like David Einhorn are taking another look at gold. David Einhorn said this week on CNBC that gold is a large position in his portfolio because he sees a problem with the overall monetary and fiscal policies of the country, and that both policies are systemically too loose. I think the deficits are ultimately a real problem, and I think that this is a way to hedge the risk of something not so good happening. These are not new topics. These are themes that gold bugs have been banging on for years or even decades. Some would say to little avail, but the fact this is drawing the attention of billionaire hedge funds, and those hedge funds are acting on said knowledge, is a potential game changer. However, it must be stressed that gold prices do not go up in a straight line. I am not a gold bug, and any objective observer would note that there are long periods where gold underperforms and certain, usually shorter, periods where gold outperforms. So yes, the above news does seem to be good for gold prices. However, given that gold prices have appreciated significantly in the past year from $2,000 per ounce a year ago, especially in the past few weeks, they could also experience a decline or long periods of consolidating, which is a fancy way of saying going nowhere, before they head up. If you're interested in this topic, please subscribe. In future podcasts, I will discuss current events as well as historical events revolving around gold as well as other investments. Stay tuned and have a good one.